Hello, YouTube. The world's largest stock, or Apple, is now back below its 2022 high and its 2021 high. So, we're going to talk about exactly what we need to do right now because this stock looks like there is a problem on it. Why? We got a big hole and we've been selling off really hard for the year. We also have 3 daily candle closes below our 50-day moving average. All these things are warning signs, but notably that we are below our previous all-time highs. But we're going to go back to a quote from Warren Buffett, which says that the stock market is a device for transferring money from the impatient to the patient. Why does this matter? Well, because I'm telling you, the biggest stock in the world has a problem. And I think the smartest investor of our time has 50% of his portfolio in Apple, 50% of his multi-$100 billion portfolio. He's got $156 billion in Apple. It's 50.04%. So we're going to go through the exact same setup we've been talking about for the last roughly month or so. I also want to go through and preview this because tomorrow is going to be a very important day. We're going to have we're going to have payroll numbers. We're going to have CPI. We're going to have average hourly earnings, and we're going to also have non-farm payroll and unemployment rate. This will all be very important because we've talked about how the stock market overall, or the S&P 500, is already in a bearish area. If you look over here to our S&P chart, we note that we're at 467 and we're pointing down. So where are we likely going to go? Well, we're likely going to go closer to support, which is down here at 455, and we've talked about on previous videos. So all we need to do is just keep respecting this downtrend, and eventually we'll hit this downtrend. I have a projected date of January 17th, if we're going to maintain this downtrend. And I'm trying something new today where I'm giving you the high-level overview in the first 2 minutes, and then we're going to go through and talk about the video today specifically, where I have all the stuff for Apple laid out right here. So if you're enjoying this video, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would really, really appreciate that. And as it relates to the economic data for tomorrow, come tune in at 9:15 Eastern tomorrow, where we will watch the reaction to all this data, and we will take you through the stock market open, and we go through the stock market close on Fridays. So the market's already in a warning. Now let's go through and read the reasons why we want to be mindful of this stock. Why? Apple's now have had double-digit downgrades, citing iPhone sale concerns. That seems like a problem. That's the first thing we want to talk about. The second thing is that Apple leads tech stock rout in $383 billion rout, right? Or wipeout. We talked about that yesterday. Thank you for clicking on the video. So we talked about the wipeout happening. Now we're going to talk about the valuation for Apple, because Apple 1 year ago was priced at 20.5 times earnings. Now it's priced at 28 times earnings. What is it? It's getting expensive. So if the stock is expensive and we're unsure about iPhone sales, that seems like a big problem because it's currently the biggest stock in the entire market. We look here to what's been happening year to date. If we go to no group, well, it's pretty obvious what's not working. It's tech. It's Tesla. It's Amazon. It's Apple. It's NVIDIA. If we go here to no group, so like wherever the biggest stock goes, the market usually follows. Yes, that's the rule of thumb. Where Apple goes, the market follows, and chips lead tech, tech leads SPY. So the biggest stock in the market is facing an issue. And then if we look over here to Samsung saying that they're going to be announcing a new phone powered by AI on January 17th. Whoa, that's a pretty big headline. Why? Samsung's a pretty big phone company. And maybe that explains the reason why we've been seeing no love on Apple so far this year. It's because they're getting ahead of what they're expecting to see. They're expected to see from Samsung, which could be pretty stiff competition. And then finally, here's your bullish tilt. We also see that this is from Mac Rumor. So sketchy rumor says Vision Pro will launch in the final week of January. So we're going to have a push-pull between Apple and also with Samsung. I want to see what's going to happen. So the reason why they're talking about iPhone declines is because of iPhone sales, which is a huge part of their revenue. They led the decline of $383 billion. It's probably even more today for the Magnificent 7. And Samsung's going to be revealing a phone on the 17th. This could be quite bad for Apple. Why? Hey, it's more pressure on the stock. And what we want to think about is, what does Apple post Steve Jobs? What if they really launched? Well, they've launched a watch. They've launched a new version of the iPhone. By the way, the iPhone guy just recently got fired, an iPad upgrade. But what's been new? Apple TV and watch? Cool. Steve Jobs has been gone for a while. RIP, my friend. So this rumor of the Vision Pro. Like, this is the first really big thing that we've seen from Tim Cook. So if Tim Cook is going to come and deliver something that is truly magnificent, one more thing, we're hearing that, according to someone claiming this out of China, that we could be seeing this happen as early as the later part of the month. So we're going to see the phone from Samsung first, then we're going to see the follow-up from Apple after. And this is a note here from Goldman Sachs saying that these stocks are not quite as cheap as these stocks are not cheap and they are widely held. So one should be a little choosy on adding length up here. Bigger picture, however, I'm inclined to keep my eye on the ball and would look to add on a meaningful dip. Now the question is, are all dips created equal? Because I just told you, like, we're back below our 2022 and 2021 high. Well, if we stay below here, nope, that's not good. It's not good at all. What I'm going to go through now is talking about the technical part. But let's get, so I got some technical feedback here I'll get to in a moment. But I just want to get through the rest of the stuff because we've been talking about how fear and greed is a time to sell. This was over 2 weeks ago now when I told you that extreme greed is a time to what? It is a time to set stops, raise stops, and to trim. So we're going to think like Warren Buffett, and we're going to think about if chips lead tech and tech lead SPY, what should happen from here? And I'm sure Warren Buffett is really paying attention, but man, he's got a much bigger problem than we do. He's got a $156 billion problem. It's Apple. But since he bought it, he's up 365%. He has crushed it. So we'll get to the technicals in a moment. But the fact that we were at 77 like 2-3 weeks ago, and today, I don't know how. Oh, we were at 75, 76 earlier. Now we're back down here to 74. We're higher on fear and greed than we were yesterday, but the market's closed red. So, like, what's happening here, right? Market's red, right? NASDAQ's red. But crypto's up, gold is up, dollar's flat now. Dollar's actually gone full circle and back down to red. So what does all this mean? It means that as the market's going down, people are getting more greedy. Ooh, I don't know if that's going to be a good sign. Why? Again, these stocks are not cheap and they are widely held. And so far we're seeing a lot of pressure so far this year. So if we look at the PE multiples now, Apple more expensive than before. It's the most expensive out of the group. It's second most expensive after Microsoft. Microsoft has more hype. It commands a higher premium. Apple better deliver something with that Vision Pro, or Samsung overhang is likely going to hurt it. Alphabet or Google only at 20x. It's where Apple was a year ago. So that's interesting. Apple looks cheap. We'll look here to Amazon. Whoa, a year ago was 46. Now it's 41. So it has gone cheaper, but it's still the most expensive of the pack. NVDA, ironically, is only here at 24. NVIDIA is cheaper than Apple. What? That's right. Meta is now here at 19.5, or the cheapest out of those six stocks. And if we look here at year to date, the reason why this is notable is because we were talking about people not wanting to harvest gains in last calendar year because these stocks have crushed, right? Apple, Microsoft, Google, Amazon, NVIDIA, Meta, Tesla. But so far this year, we're not seeing very much love. And now I'm going to tease out something I'll come back and look at a little bit later because Apple is actually due for a swing whisper. If you're not sure what this means, watch until the end of the video and make sure you come tomorrow because on the stream, we're going to talk about it. So if we now go here to Apple on the one-day chart, I will have a look. Actually, I forgot to go to here. This is something new. So if you guys like this, I will consider doing this for all the videos. I think it might be a really good resource to go back in time. And I think it's going to help me present a more compact and tight video, meaning less fluff, less mansplaining, and more value. Here we go. So let's look at Apple check by check. All right, let's go through the checklist here. So we're just going to go through because I have the notes prepared. Let's go to a 1 month chart. I'm going to delete those big, fat, stupid arrows because they're no longer helpful. So we're going to go here, delete this, delete that. We're going to look at a 1 month chart. And we already know we got that annual breakdown. So we're not going to go through that part. But if we go here to hollow candles, what do we note? Well, we're currently below last month's low. So the pattern we've been talking about on the S&P weekly chart is a failed break and then a lower low. Again, as a reminder, SPY 1 week. We have this big fat warning here, failed break. Then we get an early confirmation by getting a lower low. Well, delete week and type in month. And let's go to Apple. We got the exact same thing. We have a potential reversal signal by getting a failed breakout. It's not by a lot. Here we got a high of 192.93. Here we close at 192.5. So it's only a 40-cent failed breakout, but hey, a fail is a fail. Doesn't matter. High, low, lower, low, currently below the low. That's not bullish. And we're now back below our annual level. Okay, so monthly chart kind of looks like crap. Okay, that's easy to understand. Let's look at the daily chart now. There's a massive hole on here. Most gaps got filled. Most gaps got filled because the market actually went up, filled the gaps, and then went lower. Filled the gap, went lower. We look at QQQ, did not fill the gap, largely due to Apple. If we go to a name like Microsoft, even though it's lower, it filled the gap. It's also right around its 50 DMA. So what's so special about Apple? Well, I told you, double downgrade so far this year. And what did not work here was a bounce off the 50 DMA. It should have gapped down to the 50, pushed up, and then came down. It opened on the 50, but then we have a full red candle. We actually got 5 in a row, 5 full candles, which means that we've closed lower for the last 5 consecutive days. Okay. There's a massive hole in the chart. Yeah, that doesn't look good. 3 daily candle closes below the 50 DMA. It cut the 50 DMA like butter, like that. It barely even tried to bounce, right? Bounce only made it up to like basically the first relative low and then rejected. This low was the rejection. And then it closed lower than it opened. It opened at 187, right? And the chart got a 187. If you're not sure what that means, look it up, right? 187. Right? The stock got killed. There you go. Cut through the 50 DMA like butter. Okay. And what I normally say is that 2 candle closes above or below, just like over here, can signal a trend change. We get 2 daily candle closes over the 50 DMA. Boom, trend change. Well, what do we get here? We got 3 in a row now. And I wasn't sure about yesterday because we only got a lower low, but technically it's a failed breakdown. Now we're back below and it just looks like crap. So we got those 3 daily candle closes below the 50. The 200 DMA is next. So we got the 200 DMA at 179.91. And why does this matter? Well, the same thing. If we now go back below here and close 2 more daily candle closes below the 200 DMA, it means we're actually shifting the long-term momentum to the downside. That's what the 200 DMA stands for, the long-term price. So if we go below there, we're potentially changing the trend in the long term for Apple to being bearish. And why would that matter? Again, I'll remind you one more time. It's because on the annual chart, this is now going to act as resistance. If we're currently above the 200 DMA, but we fall below, meaning that we get back below that 179, this is going to act as tough resistance here. 2021, 2022, that's going to be tough resistance. And remember, the market's already below 470. We're already in that red light we talked about earlier today. The S&P is below 470. It's time to put our foot on the brake and stop until what? The charts start getting fixed. Until then, we opt for safety. We do nothing. It's boring, but it's going to save our accounts. All right, so there's that all-time high back test. If we're going to get a bounce from here, again, it's likely going to be on the data for tomorrow. We'll go through that on the pre-market stream. But Apple's like due for a bounce here. Is it going to happen? Man, I don't know. I don't know if it's going to happen tomorrow, the next day, but it's currently set up for an alert on the daily chart, which is exactly what we're looking at here, the one-day chart. So if we're going to get a bounce and reclaim the 2021 and 22 high at roughly 183, it could happen right now. It could happen in a few days, or it could not happen. Let's be prepared for all of those scenarios. Why? Because the S&P is already below the 470 area, which means we're in a red light, right? We're in a red circle, red light. That's time to stop. Year to date, chips lead tech and tech is down. Chips lead tech, tech lead SPY, right? That's the reminder. So chips and let's go back to the heat map here. So if we look at year to date, what's the biggest decliners? Oh, crap. It's like chips and tech. So if chips lead tech and tech lead SPY, well, maybe the S&P is going to go lower. So the note here says that if year-to-date rotation is net buying, then SPY should be able to shrug off this dip and reclaim 470 now, tomorrow, on the economic data. If it's net selling, not rotation year-to-date, we are likely heading closer to that 455 higher low support area we just talked about. So that is it. That's your video for today. If you want to go back and watch the weekend video where we talked about all the stuff you needed to know, that's now here on the left-hand side. If not, consider subscribing on the right-hand side or tune in for the pre-market stream at 9:15 Eastern tomorrow. Thank you for your support. Good luck out there.